Considering a longer stay in Spain? Whether you're working remotely, retiring, or just soaking up the sun, understanding Spain's tax residency rules is essential. This video breaks down when you become a tax resident, what income gets taxed, and how to avoid double taxation. Spain uses two main criteria to determine tax residency: time spent in the country and where your center of vital interests lies. Let's start with the time test. If you spend more than 183 days in Spain during the calendar year, you're considered a tax resident. Short trips outside Spain don't reset the count unless you can prove you were tax resident elsewhere. Even if you stay fewer than 183 days, you might still be considered a resident if your main economic or personal interests are in Spain. This includes where your family lives or where you earn most of your income. You're likely a tax resident in Spain if you're physically present more than 183 days. Your primary business or job is in Spain. Your spouse and minor children reside there. Even one of these factors can be enough. Spanish tax residents pay income tax on their worldwide income. That includes income from employment, self-employment, investments, rental properties, whether sourced in Spain or abroad. If you're not a resident, Spain only taxes your Spanish source income. This includes things like income from a Spanish employer, Spanish property rentals, or dividends from Spanish companies. Spain has dozens of tax treaties to help avoid being taxed twice. If you're also considered a resident in another country, the treaty decides who has taxing rights and helps determine where you file and what credits you can claim. Spanish residents must file an annual income tax return, usually between April and June, even if most of your income is from abroad. Failing to declare it could create compliance issues. Let's recap. Spend over 183 days you're a resident. Strong personal or economic ties also makes you a resident. Residents are taxed on global income. Non-residents only on Spanish income. Tax treaties prevent double taxation. Keep a record of your days and where your income comes from. If you're traveling across borders, let Pebbles track your tax residency clock automatically, so you know exactly where you stand.